The Todd Shapiro Show.
Time to hit the button!
On Canada Talks, SiriusXM 167.
Between Generation X and Millennial, that 3-year period where we're no man's land.
You're no man's land. Okay.
We were dubbed Zennials by some, guy who wrote an article and
the
gave us a
sleepy
name.
cohort.
We're the people who were like, we grew up with fun, and our parents let us ride bikes and do whatever we wanted. But then also I know how to, convert something to a PDF.
Okay.
So it's like I got both. I got part of the internet started existing when I was like a teen. So I wasn't born with it like most millennials
So you
are.
actually talk to people face to face in
I
high
understand.
school. You didn't look at a screen down the hallway.
Yeah, and I didn't have helicopter parenting. My parents were just like, show up once in a while, let us know you're not dead kind of thing.
Right.
So
and you do the same with your portfolio. You just check in once in a while and make sure it's not dead.
I just make sure I'm like, okay, I still got stuff in there. That's pretty good.
But do you have them on your own app? Do you you have an advisor? How does that work for you?
It's through it's through the internet. No, but I check it through. I forget what it is. It's all done through my day job.
Sure. And do you sort of advise? Are you the one? Do you go after your own companies that you invest in?
Yeah, and I have two super intelligent guys that tell me get on this, and if I have money at the time to do it, I'm like, all right, I'm in.
Because Genevieve, Genevieve. I've known you for 10 years. Genevieve Roch-Decter, we talked about this new way that people are really getting a lot of their financial advice now, and a lot of that is online. A lot of that's through Twitter and the investment forums and things. Is that a safe way for people to be getting investment advice?
Well, I don't know that it's a safe way. It's a new tool, okay? Every tool has its ups and downs, right? But I can tell you just from in the last 3 days, we were in Bahamas. We put on a conference, and a lot of it we showcased on social media, on Instagram. And I literally had brokers at the banks, at the big 5 banks, watching, and they would message me saying, hey, that deal looks really good. Hey, that company looks really good. Can I get involved? On DM, on direct message on Instagram. And a lot of these brokers were millennial brokers. So they're my age, from anywhere from 28 to, I guess, 38, kind of. I think that's the age range around there.
No one knows, which is also
no one
funny.
really knows. But it was fascinating because they're sitting at these boring banks where the banks don't let them do anything fun, really, because they've clamped down on all the risk because they don't want people losing their money. And so they're trying to find other areas where they can actually learn about good investments. For example, cannabis. The banks wouldn't touch cannabis for 3 years. Now, it's I don't know that it's over, but the easy money's been raised and has been made, and now the banks are we're in. So now all these brokers are going to call their clients kind of at I don't know if it's the peak of the market. It's not the peak, but it's not the beginning. And say, oh, you should buy this RBC offered cannabis deal because RBC said it's safe now, but it's probably really not. So the point is that social media is offering a platform for brokers at these boring banks, and I bank with RBC, so I shouldn't call them that, but to look at other deals, to look at other companies that they're kind of gated from looking at.
I saw something fascinating on the Grit Capital's Instagram account. Everyone should go and follow it, and it actually blew my mind because I am one of those guys, you joke about this with me, who will look at stock tips based on what Twitter personalities are saying. So instead of the hashtag, whatever word it is, and that's kind of your search. In the stock world on Twitter, people are putting the $ plus the ticker symbol, and then you can go and click latest, and you see what people are saying about them. And this blew me away, and I learned this through your Instagram, Genevieve. Is the fact that there are now these robotic AI learning systems that will follow the trends and the algorithms based on certain tweets, knowing that people might go and buy, and they'll go and jump and buy it real quick because that will increase the price of it. So technology really has become involved in this, hasn't it?
We presented this social media guru, I'm not going to say who he is, but at our conference to very sophisticated money managers. And we talked about this. So this social media guy showed a Twitter account of a very famous fund. Well, they're not a fund. They're like an advisory group in the U.S. that they find companies they want to short. So that means they think the stock's going to go down. So they'll announce, like, we think this stock's going to go down. We put out a short report. And the social media guy showed how algos, so like algorithmic trading, is following this specific account, because when they go live on Twitter with, we're going to go short this stock, they want to get like on that trade right away so they can make some money. So now algos are watching like Twitter accounts, Instagram, and institutional sophisticated investors that were at this conference that managed billions of dollars had no idea. Like, they were stunned. There wasn't even questions asked, because they were just so blown away by this.
And if you recall, we did like a fun little mock show, thinking maybe we'll do some more on that side of it for Stockhouse. It never really went anywhere. And one of the things I'd been talking about that forever, and that how it is impactful. Like, listen, and I'm not giving anyone investment advice, but if you start to follow certain accounts, and follow me, and you can see who I follow, and then a lot of them are there. I've sort of gotten rid of a lot of the noise on my account, the gossipy stuff. I'm starting to follow people who can help me be capitalistic and make some money. And it's not to say it's a foolproof plan, but sometimes if people are tweeting about things and they tell you they have a position, they're being, full disclosure, you can quickly watch a stock go up. And if you get in and don't be too greedy with it, you can typically, at least in my experience, make a little bit of money without, it feels like, not a lot of risk, as long as you don't try and hold on to something you don't know a lot about. Like, take a little bit of money and just get out of there. Again, it's not foolproof. And then you got to be careful, because I would imagine there's people who are being a little bit snaky about it and want to pump a stock, and knowing that people will go, who are dumb like me, to buy it. And that's happened to me recently, to be honest.
I just learned the term of this. It's sock puppeting.
No way.
Sock puppeting, I think, is the funniest
Dominic,
word.
That's something else, I think, in your world.
A sock puppet account is when you set up a Twitter account and you go anonymous, like you pretend that you're not yourself, and then you start saying like good or bad things, and you're being deceitful.
Yes.
And so people open like dozens and dozens of these accounts, and it's called sock puppeting. And actually today, I'm not going to say who, but a client of ours called and said, there's someone saying really mean stuff about us on one of the stock boards. Can you guys go counter that? And I'm like, if the information's correct, I'll do it, but it's going to be under our name. I'm not doing it under, and I'm not a sock puppet. Like, I'm not going to, because it's not legal.
First of all, tomorrow, the first thing I'm doing is creating a sock puppet account, and I am going to give the worst financial advice. But second, isn't this what was happening to a degree with pot stocks? Because, like, there was so much new money, and people were buying pot stocks who had never purchased a stock before. So all the sharks were like working together to like drop the value of it, and then all the people new money would panic, and then the stock value would drop, and then all the sharks would just buy up, and then do the same thing over and over again. Is that not like that was a thing that was happening? Am I right?
Well, I mean, I'm sure like they got together as a group and said, we don't know much about investing, but we really like ABC cannabis or whatever, and all got long the stock, meaning they all bought it, and then probably got really loud on these platforms, and if they need enough volume though, right? Like you need to, so that's the thing. You can't really manipulate a stock unless you have a lot of volume that you're trading. So I'm not sure how influential that could be. Certainly on the short side, when you put out reports saying, like there was one recently with a company called Afria, where these guys went overseas and took these photos of what they considered the assets of the company, but they were not the proper photos, and they just they destroyed the value of the stock.
Basically going from about $11-12 to $5. It's up today around 10. If people had bought in that fear and panic at the 5, like you're saying, the new investors, they're all freak out. Yeah, I'm always amazed by this. We got Rob Bebenek here, Genevieve Roch-Decter from Grit Capital. It's our Millennial Mondays. I love this stuff, learning about everything there is to do with really the capital markets. And I am amazed about the sort of legality of all this kind of stuff, where people need to be careful. That even goes to newspapers too. Like I even thought, as cannabis came into play, there would be like all these negative reports that came in, and will it be legal, or are they pushing the date back? And I used to think that was set up by certain people within stocks that could write an article knowing people are going to panic and sell, and then others will just buy the stock knowing that full well there was never a question and doubt in hindsight that cannabis wasn't going to be legal once they started talking about it in this country.
Yeah, I mean, I abide by the rule of disclose.
Yes.
So even today, my business partner and I had a meeting with a lawyer, and we're just like, where should we be disclosing this stuff that, we own these stocks? 'Cause I just assume that everyone thinks I'm biased because, look, I work for companies, so just assume I'm biased. Like, he's just like, disclose it everywhere. So there's disclaimers going up everywhere. Like, I put disclaimers on Twitter, Instagram, everywhere. Assume that whatever I'm talking about, I'm being paid somehow.
Or you have a position in that company.
Yeah, and I don't think there's anything wrong with that because I think everybody in finance just assumes everybody's talking up their position anyways. But for new people coming into the game, maybe they don't know, and so I would just say you have to do that.
And the difference is because we saw a lot of this with, for instance, like, and sorry, because I'm all over the place, but I also like invest in some of the companies that I work with because I start to get to know the people and I know the companies, and I'm in an admiration of where certain companies will go and where I believe they'll go. As well, I'm thinking, well, if I'm helping promote it, maybe that, I'm not promoting a stock, I'm promoting products and value that maybe that will help one day the stock go up. So, I think that's safe to say with me to assume. But what I was getting at was, in the day there were things what people need to be really careful of. And I don't think I feel like it's not happening when you hear people talk about this. But in the ICO days, there were like paid celebrities to ICO was an initial coin offering in the crypto world. And there were like paid celebrities to go and promote people to buy something that really wasn't tangible and didn't exist. I mean, we know certain big coins like Bitcoin or Ethereum and Ripple and stuff, they're not going anywhere in my opinion right now. But there's some that were just never even started in the first place. And they're paying like these big celebrities. And then there's some cases where they would just get rid of them right away as that money came in. And that's like what truly a pump and dump is, right?
Yeah.
Where people promote something and sell off that stock. But if you know that, for instance, I'm holding certain stock, you're holding, that's very different than a pump and dump. And it's okay to talk about something, isn't it, that you're invested in? And you're never telling anyone to buy. You're saying do your due diligence, learn about it.
Right. And in the ICO days, it even got worse than just like, Kim Kardashian or whatever touted an ICO. You could pay people, and it was mostly done offshore, to buy up the ICOs, but it was like fake volume. So it was like real equivalent to stock manipulation, but it was like coin manipulation. But because it was unregulated, nobody got in trouble. So there's been all these reports that have come out that even a lot of the Bitcoin volume and like Ethereum volume, but like all the crappy altcoins were not, like, it was like a fraction of what was actually traded. And so that's a big no-no in public capital markets, but obviously the ICO world and the coin world has a lot of growing up to do. So
what's like a quick advice you would give to a young, new, and when I say young, a millennial investor, what would be some quick advice you would give them?
A couple things. If you have come into money, I would say don't invest in your in your friends or family's businesses that haven't been kind of put through the ringer. Because you often hear these stories where people are like, they reach the age of their early 30s, they now have some disposable income, and their friend comes up to them and says, "Why don't you invest in my business?" And this is happening a lot in cannabis because somebody gets a license, like maybe a retail license, like Ontario just gave out to 25 people in Ontario that don't know anything about running a retail cannabis operation. But I would say instead of doing that, I would basically team up with a younger broker. So, somebody at one of the independent firms like a Canaccord or a GMP, as opposed to like the bank ones, because the bank ones, like I was saying before, are not really...
They're a little stale and boring,
yeah,
let's be
stale
honest.
and boring. They're not allowed to buy these small cap companies. But the guys at the boutique, girls and guys, I always say guys because I've been in freaking finance for 10 years and I even call myself a guy. You should, find somebody that you gel with, that you get, that's near kind of your age group. And gets it, and then get on gritcapital or at gritcapital on Instagram. I'm fully biased, of course, but I was a portfolio manager before. I managed money for 10 years, so I know all the games that get played. I know all the people across the country that invest in this stuff, and so I have a pretty good filter, if I may say so myself.
That's awesome. Rob Ebenick, you're sitting there going,
Yeah,
oh,
I don't know. Maybe this makes me a bad person, but I don't feel bad for somebody who buys into something they don't know anything about and loses all their money.
Listen,
do some research, read a book.
I am 100% on the same page as you. At the end of the day, the accountability, and too often you don't see this. Don't get me wrong. People should not be scamming and people should not be doing pump and dumps and stuff. But if you're doing stuff within the regulations of these exchanges and then someone goes and hits buy at a certain price. And listen, I've lost money by doing that too, by stupid buys because I didn't know the management team. I didn't look carefully at the revenues. I didn't even really know what the business has done at times, but I just saw a cool story surrounding it, which was you're allowed to do forward-looking statements in certain exchanges. And so that's what I saw. I bought into that. It was a stupid buy. I'm accountable. And I think more people need to take that approach as opposed to always laying blame. In a lot of aspects in life, by the way, it's like this new culture of always laying blame on other people. There needs to be accountability, and people need to look within.
If you're buying into something you don't know anything about, the chances are you're trying to do that to get rich quick, and that's pretty much gambling, and you don't feel bad for somebody who empties their wallet at the casino, so how is this any different?
Peter Lynch, who ran one of the most successful mutual funds of all time, used to say, invest in what you know. Like, if you know something really well, I don't know if you're in the, sports and e-gaming world, invest in those companies because you have an edge, right? You have an edge, you have a network. And so that's also what I would say, is to look for those places where you do have a valuable edge. Another thing that people don't know about is also, it's not just a management team, it's not just how much money that company has, but it's like, where was the previous rounds of financings done at? Because oftentimes what happens is when a company goes public, they did a bunch of previous financings at significantly lower prices. When that company goes public, it goes down. People are like, why? The outlook looks so rosy. They have money. And it's like, because some guy 5 years ago who bought at 10 cents is now up 10x and he's going to get out. And that's normal. There's a cycle to this stuff and you have to chew through a lot of stock. But some people might get scared and sell, when they really should just be holding on for a bit longer. Is
that where some people start to think it's not fair, though, where there's accredited investors that can get in on early rounds to certain companies and really, I guess, have a head start, so to speak? Or then, and I might counter it going, that was someone, though, who invested very early on in a company, which can be pretty dangerous, too, not knowing where it might go. So there is sort of risk on both ends. But what are your thoughts?
Yeah, there's a what do you call it? Like a curve, right? A risk-reward curve. So the guy that got in at 10 cents, that business probably had no profits at that time, probably didn't even have revenue, probably just had like a license and a pipe dream. So that guy was willing... person was willing to lose.
You're so sexist. Genevieve Roch-Decter. How can I trust her?
I'm offended.
Yeah, that person was willing to lose all their money, right? Whereas not you, but like somebody else who has a lower risk tolerance and a lower risk ability shouldn't be taking those types of bets. So that person, was rewarded for that extra risk taking. But I would say that a lot's changed in the financial markets, whereby accredited investors, people with money, have less and less access to the in on these really good deals. So they have to really get themselves networked and figure out who's got the good deals. And the best people that I see take time out of their day to figure that out and don't just rely on a broker or they do the work for themselves.
How was the conference in Bahamas for Grit Capital?
Ooh, I never thought I'd say this, but I'm over networked. It was networked for 12-hour days for basically the entire week. So no, it was amazing.
And it's just, when you do your Grit Capital events, is this something that you open up to everybody, or do you have to be within a certain industry, within certain networks? Like, how does that work if there are people who will want to join and learn more about this?
Yeah, well, accredited investors, because I can only basically show products to products companies to accredited investors. But then on top of that, we have the brokers that, could invest in these deals that may be your broker or whatever, so they eventually could get down to you. But really, it's accredited investors and up. So accredited investors, hedge fund managers, institutional portfolio managers, family offices, that kind of thing.
So, yeah, it's interesting because I sometimes struggle with telling people what to do. Everyone's coming to me for financial advice lately, and I never give them advice, but I'll say one or two things like, either get the broker to do it for you, and then you just call up your broker and you like a story or like a stock, you see some revenues, you see, I think a great one to use is Tesla. A lot of people bought into Tesla because they liked Elon Musk, right? Let's just be completely candid.
Cult stock.
A cult stock.
Yeah.
They either felt like a part of the community, and they didn't really know what they're doing, and including the point where someone might have shorted that stock based on knowing that there was that tax going to electric cars that was being diminished. They might have known that would have hurt the stock price, knowing that it might hurt job loss one day. So that's just a story of it. But then you can go and open up, whether it's a Questrade or an E-Trade or an account. So I mean, do you? Because I tell people to do both. Have a little bit of safe money with a bank, maybe. Have a broker that can have some fun with some money, and then maybe just go and gamble some of the stuff on your own too. Is that good advice? I don't know.
Gambling is a hobby, right? So take 10% or whatever you're able and willing to lose. Yeah, take some of that instead of, I don't know, doing the other kind of gambling that probably has lower risk reward. But yeah, have some safe money, and then like I said. There's a lot of products being established out there for like the millennial investors, like ETFs. Again, like really boring. Like you're not going to get access to the cool stuff.
What's an ETF?
Exchange traded fund. It's like getting access to the stock market at really low fee. Like you can now get access to the TSX, like all the stocks on the Toronto Stock Exchange for like, I don't know, less than 10 basis points or something. Like super cheap. Like basically it's almost like they're paying you to own the stocks. I'm over exaggerating, but that used to cost a lot of money. You used to have to pay 2% a year to own a basket like that. And now you can do it for like nothing. So you can have the safe money stuff, like you can own it really cheaply, and that leaves you more money to go, gamble, like you say, Todd, with the other stuff. And
there's a lot of great ETFs out there. There's an ETF within. Well, at least it's like I'm on TD, so I know there's like an emerging tech sort of stock, and I think it's 908 if people want to look it up or whatever. But like I know that Apple's in there and Netflix is in there and all the companies. And the other thing it does for Canadians, and you listen a lot of time, most of our listeners are Canadians. It allows you to get to open up your portfolios to American exchanges. Which is nice without converting the money and losing all that kind of stuff. So
yeah, you get to ride the U.S. dollar.
Yeah, you get to have some fun with that as well. So and the other thing, and this is why I love when Genevieve Roch-Decter comes on the program, and she's going to come on every Monday for our Millennial Mondays, Grit Capital, is that this stuff isn't daunting. The fact that you just asked very, very, very simply, like, what's an ETF? I want to educate people in these little terms. Don't be afraid of what you maybe just think trust fund babies had or private school people went to and understand. There is a world here that is very easy to learn. And trust me, if this idiot can learn it, I think anyone can learn it. So I think that you're a great teacher by sharing this information for us.
I think I'm having an anxiety attack picturing 12-hour networking days for one day, let alone you did it for more than a week.
Well, one of the hardest workers you'll ever meet.
That's
is
a blow
right
my brains out scenario. Like, I hate networking for 11 minutes, and you did it for 12 hours a day for how many days?
Well, the intense period was 3 days, but on Saturday, so we were in Bahamas. It was beautiful outside.
Yeah, that makes it worse. Yeah. It's beautiful, and you're doing the worst thing for me on Earth. Like, that is. You're describing my own private hell.
Well, you would have hated this. I had to tell the same story 20 times for 9 hours.
Oh, no, I'm a comedian.
Yeah, that's all you guys do. You do it for 3 years. Some comedians do it for 5 years. They don't even get a new story.
I'll spin a yarn.
Well, I could use your help because I didn't have that many great jokes. I was just like, buy the stock. No.
But you ended it on a boat. That's what I know you're getting at.
Yeah, we ended on a boat, and that's what we do best because we become friends with all the investors we make and the CEOs we hang out with. So it doesn't seem like work. I'm still exhausted, but I'm like, wow, I got to hang out with a former quarterback from the Eagles who's now a cannabis investor for an entire day on a boat. Like, that sounds awesome, doesn't it? That doesn't sound awful.
That sounds great.
It's like you hanging out with
I want you to name names.
Never.
Okay. Well, Genevieve Roch-Decter, thank you very much. Great Capital. And we'll be doing this every Monday, whether you're in studio or not, because you are a jet setter and hustling and making things happen. But everyone can go and follow the Instagram accounts and learn from there. And a lot to learn. Again, assume that what she's talking about, she owns. And also do your due diligence with everything. We're not here to give you financial advice. We're here to open up your minds to, exploring a way that you can make some money, invest in some great companies for your future. Thank you so much. I appreciate your time. Are we doing an Instagram story?
Yeah,
here?
you are.
Okay, I appreciate it. Okay.
You're listening to The Todd Shapiro Show.
You're still here? It's over. Go home. Go.
On Canada Talks, SiriusXM 167.